Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 20th of January. Starting off with Concha, and it looks as though we got a higher low here for January versus December. Low in last month, 0.5 pence. So far this month, 0.7. Be cautious on the stock, maybe wait for an end of the day close above the 10-day moving average at 0.94 pence before going for a retest of 1.7 pence. January resistance to date. There is bullish divergence, or at least an uptrend line in the RSI window as well, which backs the idea of a possible new rebound here. Infastrata is next, and a horrible ride over the recent past, obviously, for the shares. Situation now is that looks like we've got a narrow bear trap rebound from below the 1.39 pence August low. Didn't quite close back above it yesterday, but the higher low for the second part of January also backs the idea of a base being built, as does an uptrend line in the RSI window, which has been multi-tested over the past month. Initial target, the 1.93 pence 50-day moving average level, which is also the bottom of the December gap to the downside. Obviously, if you're cautious of the stock, you wait for a proper break above 1.5 pence plus before going long again. Another fiddly situation in Inspirit. Here we have again what looks like the makings of a rebound. Shares sandwiched between zero point 0.4 and 0.5 pence, 0.4 pence. The old July floor and a bear trap below that for the beginning of January. If you're cautious on the stock, maybe wait for an end of day close above the 50-day moving average at 0.5 pence, which is also an extended RSI, extended resistance line in the price window. Also, the hint of an uptrend line in the RSI window as well, running through the 50 level off which the shares have just bounced. So that could be a leading indicator on fresh upside. Obviously, the initial target here is to retest the post-October resistance towards 0.8 pence, stop loss below 0.4 pence in the first instance, only back below 0.3 pence though. A threat to the bulls at the moment. Another stock which has been bubbling in the right way over the recent past is Jubilee Platinum. The main plus point here, really, the way that after the spike in August towards 5.5 pence, we've seen a consolidation at and above the 200-day moving average at 2.89 pence. And while we hold above that, the technical glass here is half full rather than half empty. If you're cautious on the shares, maybe wait for a weekly close above 3.5 pence before going long again. But it does look as though overall we're in a rising trend channel from May, and that the shares can at least retest last year's resistance over the next 2 to 3 months. Optibiotix, not a stock to be messed about with if you're a bear over the recent past. Big rally here. What's interesting for this week is that we've bounced off 70 pence again. That looks to be neckline support and should take the shares back up towards the £1 area at the top of this rising trend channel from last year. If you're cautious on the stock or want to see further evidence of a fresh upside, maybe wait for an end of day close back above the 50-day moving average at 79.96 pence before going long, and also RSI 50 versus 47 out of 100 at the moment. Finishing off with Rurelec, here we've got a stock which looks as though it's bumping along the bottom. We've got an uptrend line in the RSI window broken through 50, which is a plus, broken back above the 50-day moving average at 0.97 pence as well. So above that, possibility of a target back up to the top of this rising trend channel from the end of October at 2.02 pence over the next month or so. And that would be taking the shares back to where they were roughly in September. That's it for me. More updates at this time tomorrow.